Do you want your business to grow faster? Are you open to new and out-of-the-box ways to drive revenues and increase value? How do you imagine the most successful entrepreneurs and business leaders double, triple, or expand their businesses tenfold or more? The answer is Deals. This is a weekly podcast featuring conversations with business owners, executives, and leaders as we reveal behind-the-scenes details that give you, our listeners, the confidence to pursue your own deal-driven growth. On this show, we discuss a huge variety of deals, everything from large, complex mergers and acquisitions, capital raising, joint ventures, strategic alliances, real estate, affiliate and sponsorship deals, franchising, and more. My name is Corey Kupfer, and I've been supporting deal-driven growth for businesses for over 35 years as a successful entrepreneur, professional negotiator, and attorney. My goal is to help you strategize, plan for, find, and complete deals that will help your company grow faster. Welcome to the DealQuest Podcast. Let's get started. Marty Fahncke is a seasoned world-class marketer and dealmaker with over 35 years of experience in growing and scaling businesses, and over 25 years of mergers and acquisitions experience. In that time, Marty has helped hundreds of small businesses scale to over $1 billion in combined revenue and executed nearly $500 million in mergers and acquisitions deals. His first deal was a business he started from scratch with some buddies that he sold for $1.5 million. And his next deal was a strategic acquisition which combined a $2 million company with a $1.5 million company and built that business to $30 million in revenue in just 2 years. Since then, Marty has been involved in deals ranging from $5 million to $600 million and everything in between. He's a top-ranked podcast guest. He speaks on stages around the world, and he is the best-selling author of Boomer Sells the Business, a step-by-step guide to cashing out and living large. Marty, welcome to the podcast.
Well, thanks, Corey. I appreciate that introduction. I'm looking forward to a great conversation today.
Yeah, listen, I'm excited to talk to you. Obviously, you've been in the trenches in various roles, as a founder, as an operator, and then, as an M&A professional. But before we get to all of that great deal experience you have, I want to take you back to maybe when you were a little kid, maybe 10, 12 years old. What did you want to be? Because I'm guessing, an entrepreneur and deal maker and M&A professional wasn't it back then, but you tell me.
Well, that's a great question. So it was 10, 12, it would have been one of two things, either a forest ranger,
okay,
or in the military. Those were my two kind of paths that I was hoping to go down. I then learned that forest rangers don't make any money at all. I realized that wasn't a good career path. The military and I couldn't come to terms, and so I wound up down the entrepreneur path and haven't looked back.
I love it. So now I have to ask, because as a guy who grew up in Brooklyn, in New York City, forest ranger was not in my, on my menu. So where did you grow up?
Well, I grew up in the mountains of Utah, so I've spent a lot of time in the mountains. I ski, camp, hike, hunting, all that good stuff. So I grew up in a lot of the national forests that are in that area, and along the Rocky Mountains, from north to south. I mean, you got Glacier National Park and Yellowstone, and then you've got the Wasatch Front, and then you've got the dinosaur land down through Moab and Bryce and Zion, and then down through the Grand Canyon. It's a paradise as far as kind of like national parks and just beautiful scenery, and that's where I grew up. And so I knew a lot of forest rangers, so it makes sense. We probably didn't know a lot of them in Brooklyn.
Yeah, no, not at all. Although I've spent not close to you, obviously, but as a tourist, a lot of time in Utah, and, Alta's still one of my favorite mountains.
Oh, yeah.
To ski.
Yep.
And then I've been to St. George probably 4 or 5 times, and I love that area. A lot of hiking and some rappelling there, and
Nice.
all kinds of cool stuff. Very cool restaurants I love in St. George, and ATVing. We've done all kinds of stuff there. I've been there a number of times, so Utah's a lot of fun for this Brooklyn boy.
Definitely. Yeah.
So one other question looking back, I mean, your bio mentioned an early deal, but what was your first deal of any type? Was it that, or maybe it was something even earlier when you were younger?
Well, I was entrepreneurial early on. Sold water purifiers and vacuums as a teenager. I had a bike rebuilding, rehabbing and reselling business, bicycles, when I was like 12. I never had the lemonade stand. I didn't live in an area where a lemonade stand would have worked, but I always had sort of an entrepreneurial bent. But mergers and acquisitions was completely off my radar. Some guys and I started a company selling a sporting goods product. It was a soccer product. And it was, when you hear grassroots, This was literally a grassroots product because we developed it. And the way we sold it was all of us had parks that were nearby our homes where soccer was played by kids every weekend. And we would go to the parks and we would literally set up a little canopy and a little table and we would demonstrate. Actually, I had my kids demonstrate the product and I'd sell them. And we learned what triggers that people heard that they wanted to buy and what the questions they had and everything. And from what we learned in those parks on the weekends, I then created the marketing campaign to get it on television and QVC. And very quickly, it became a huge selling item on QVC in the United States and Japan. And it did very well on television. And that's why, the year and a half into being in business, we were able we had an unsolicited offer to sell the business for $1.5 million from a private equity firm. Here's the thing. So when you're in your 20s and you just started this thing is in your backyard, $1.5 million seems like all the money in the world. And they went, it was cash. Well, what I didn't know was that we were being bought by a private equity firm. I didn't know what that was. And they were doing a roll-up. I didn't know what that was. What I should have done at the time, instead of taking the cash, I should have.
You said you didn't take any rollover equity, it sounds like.
We didn't take any equity. We didn't even know to ask for that. We didn't know that was a thing. I went back and did a calculation later on after the company went public, and we left behind somewhere around $24 million if we would have rolled that into equity. But we didn't even know. And so, looking back, I wish I wish I'd asked somebody, hey, somebody offered me $1.5 million for my company. What should I do? But it's just, you don't know, right? And that's why part of why I do these podcasts. I like to educate people and help them understand. So people think that, acquisitions are for big companies, airlines and banks and huge tech firms and stuff. And they don't realize how much is happening in the world of acquisitions in small businesses, medium businesses, everyday businesses that are all around us. And so that's part of why I love doing these podcasts and interviews and sharing this information with people, because I'm just looking to turn that light bulb on and help people understand, oh, maybe this could be something that I could benefit from as well.
Yeah. It's interesting because one of the stories I've told in this podcast a few times, and I won't tell the whole thing, but people who've been listening know that I had a business when I was 15 where I had my friends to deliver flyers door to door in Brooklyn because I had worked for a company doing that. And then I stopped at stores, got my own account, counts as a 15-year-old. So you and I have a lot in common of that natural entrepreneurship. And literally I was, I'm older than you. So, it was the 70s. I'm making $300 a week as a 15-year-old, 16-year-old kid.
It's a lot of money back
Big
then.
freaking money. But then at 17, I went away to college and I just left the business because I didn't know there was even a concept that you forget private equity. I didn't even understand that I had value in clients that I could have, why did I just sell it to one of my buddies who's delivering flyers to me, right? I just sort of all right, I can't do it anymore. I'm going to college. And it's the same kind of conversation. I just didn't grow up in a world where anybody had any deal sophistication, not to even mention entrepreneurial sophistication. My parents are smart people, but they worked for somebody for their entire lives and they didn't even understand, how did we create a son? They didn't understand me,
Yeah. I mean, you don't know what you don't know. So.
Right. And it's fine. Now I didn't leave as much money on the table, for my little business, but there was something that, there was enterprise value there. I had clients. I had a cash flow, but I had no idea that had value. So, all right. So you get, so interesting because, you said, okay, you didn't realize on the rollover equity. And it sounds like obviously it's interesting because some of the roll-up firms, that's built into their model, at least to have, some percentage be rollover equity, right? But it sounds like these guys, it wasn't necessarily, so you didn't ask for it. So they sort of up to pay cash. And
yeah, it was interesting that they didn't talk about that. It wasn't ever really discussed or offered. And I think it was a small enough amount of money. They were just, let's just write a check and not worry about it kind of thing.
Right.
And so, yeah, and looking back, I wish I'd have known or I wish they'd have said something. And it's 25 years ago. They might have said something and I didn't understand what they were saying. So I should have heard it. They might have said, do you want some rollover equity? And I'm like, no, thanks. I'm full. I don't know.
So exactly. I don't eat sushi. And also you didn't, interestingly, in terms of part of what you do now, you also didn't chop the deal, right? Or hire a bank or anything. Obviously it's small enough, at that size, you wouldn't rely on a bank. Maybe you get a broker at best, but you were and this is not unusual. Obviously it's
yeah.
You probably, like me, grew up, if somebody flashed $1.5 million at me in my 20s, I'd be like, that's more money than I ever could imagine.
That was a very meaningful amount of money. I mean, there's a movie that came out in the 90s with Tom Hanks called That Thing You Do. And it's about a fictional band that, and where they're gonna make it. And there's a line in that movie that sticks in my head all the time. And this guy says, "A guy in a really nice camper just offered us a record contract." And that line's, and this was the same thing. The three of us were like, "Somebody just offered us a minute. Oh, sign, hurry, quick before they change their mind." That is the extent of the negotiations.
Right. So let's roll forward. Let's talk about this second deal that was mentioned in your bio, which obviously was sort of like the next step up, right? You take $1.5 million and a $2 million company, you combine that, and then obviously you grew it significantly, mainly organically, right? From there.
Yeah.
So talk to us first about combining the two companies. Like, how did that come about?
Yeah, so that was a cool situation. Fast forward only about 2 years from the previous deal, and, I thought I was the smartest guy in the world because I sold the business, but I didn't know anything about it. And I was, brought on as a consultant for a company to help establish their internet division. This is not, this is 2000, 2001. I mean, this
Yeah.
was, this was, people that e-commerce was still fairly new then, etcetera. It was a TV company, and so I became actually the very first person to ever put a URL on an infomercial. Up until then, only toll-free numbers were on infomercials, and there was this whole, people were afraid to even test it. "Oh, I don't want them getting lost out on the World Wide Web," and all this kind of stuff. So, I was a pioneer in the crossover of e-commerce and television, and had a business that we were selling, about $1.5 million a year in product. It was, a year too old. And I had a competitor who was doing really, really well. And this was pre-Yahoo, what was it called? Overture. There was a search engine called Overture. You can buy clicks for 5 cents. And I mean, it was Wild West, crazy fun times. Overture got bought by Yahoo eventually, but so we're doing search engine marketing. We're the very first to do that. I had an affiliate program with 28,000 affiliates. We had one of the very first affiliate programs. I had the second largest affiliate program next to 1-800-Flowers actually at that time.
Okay.
So we're doing some fun things, and some things were starting to happen, but this other competitor of mine was also doing some things, and they were doing a little bit better than me in a couple of areas. I was working with a private equity backed firm. We were backed at that time by HIG Capital, which is still around today, and a great PE firm. And I went into my CEO and I said, "Well, here's what we're doing great, but there's this other company and they're kind of doing this," and was kind of venting a little bit. And he said, "Well, instead of trying to beat them, why don't you go buy them?" So, do what?
Right.
Call them up, see if they're for sale. Okay. So I called the guy up, and we kind of knew each other. We were competitors, but we kind of knew each other. And I said, "Hey, would you ever think about selling your company?" He goes, "Yeah, sure, I'd be interested for the right deal." One thing led to another. We acquired his company. We paid mostly equity, almost no cash, big earnouts, everything else. His team and the skill set that they had, and my team and the skill set that we had combined, plus the fact that we were the two heaviest hitters in our industry, and now we're not competing with each other,
Right.
instantly created this organic growth that just skyrocketed. And yeah, we shot to $30 million in revenue by the second year. And I mean, it was just the most perfect study in where acquiring your competitor can be the most amazing thing. Is it just, and to this day, he and I are friends. And he actually went on to found another business. Well, I went on, found another business. He worked for me, and then I worked for him for a little while. And then he went and started a company, and he just got acquired for 600 million, another company that he just started. So
Very nice.
pretty cool. But that was the very beginning of it.
Yeah, very nice. That's amazing. And it really does show, a few things. I mean, like, obviously, you pointed out two things that I'm just going to emphasize. I mean, one is that you recognize that they were better at certain things than you were better at certain things than other. And then, there's always that decision. I think there's, just as entrepreneurs or whatever, I think there's this default assumption that you always, like, you have to outcompete, right? Like, one of the things that some of the listeners know, I do talks on whatever, called my talk, there's a deal for that. It's like there's an app for that, right? Any business frustration problem or issue, there's a deal for that. Doesn't mean you should do a deal. It's just another tool in the toolbox, right?
Right.
So when you look at, if one of your challenges is that you have a competitor that's ahead of you or better at you at X or Y or Z, right? You can go try to improve, right, and compete with them. You could try to outmarket them on it. You could hire other people. You could try to maybe hire even people away from them. There's all these other ways you can do it, but you can also buy them, right? And that's what you did. And then obviously you had the additional benefit of taking out the biggest competitor and combining it. So now there's nobody who's really playing at that level. I'm sure there were others in the space, but not at that level, right?
Right. Our customer acquisition costs went down to a fraction of what they were because we weren't competing against each other. And, servicing those customers, everything improved by getting rid of the competition and collaborating instead of competing. And it's interesting because today I run the business with a philosophy. There's a book out there called Who Not How, Dan Sullivan and Benjamin Hardy.
Yeah.
And it's really about, if something needs to be done, you should never think, how do I do this? You don't take the time to go learn it and try and figure it out, or hire an expert who's better at it than you are, and let them do it so that you can use your core expertise doing what you're better at than anybody else in the world, right? A lot of people apply that to kind of vendor selection or, hiring or things like that. I think of it as an acquisition playbook. Who is better at something than I am? And I'm going to go acquire them instead of learning how to do it. And then everybody wins.
And it's interesting because you raised this thing earlier on about how, some of us thinks, that the M&A is only for the big players or whatever, right? And you hear this concept more often talked about with bigger players, where they talk about the build buy decision and on how, like, some people say, oh, build up this company, so and so's a big player in the space, they're going to crush you. And people who are smarter say, well, you know what? There's a good chance they may not crush you because they may choose to buy you, right? Because when they make the build buy decision, they look at it and they say, can we build this? The answer always for a big company is sure, they could, right?
Right.
They have the money, they can hire people, whatever. But like, it's actually quicker and ultimately less expensive, even though they might be paying more upfront, right? And speed to market and dealing with their big competitors and all that stuff. There's so many factors that have bigger companies make the buy of a build decision. What some people don't realize is sort of going back to a general theme, making it specific here, is that conversation of build versus buy is not just, an important inquiry for the mega companies. It's also true for the middle market, lower middle market, and even maybe at a small level Main Street, but certainly in the lower middle market companies. They should really be, like, a lot of them don't have the buy option. Goes back to there's a deal for that conversation. Like, it should be in the analysis. Maybe it's better for you to build. I don't know. I'm not, saying it's always better to buy. It should be considered.
Yeah, absolutely. And many people don't. And, it's funny when people are doing a buy versus build analysis, I almost always see unreasonable optimism on the build side, right?
Yeah.
It's like, okay, I see what you've done here. Now, reality is it's going to take twice as long and cost 3 times as much as what you have here.
Right.
Now do the analysis. And I don't care what the number is, double it and triple it, and then you'll get closer to reality.
Right.
Because it always takes way longer and costs way more to build anything.
No question. And then on top of that, you got to figure in, a lot of people will do this, what is the opportunity cost of that year or 2 or 3 or whatever it took you to build it, right? In terms of loss of momentum in the marketplace or revenue you would have earned from it, or a customer loyalty, whatever it can cause. So that lost opportunity cost is often estimated as well.
And it can be in any size business, whether it's, a Main Street type business or much larger. So I've got an example that I did a few years ago with a bookkeeping firm. So we had a bookkeeping firm that was running the books for most of our businesses. And the owner was like, hey, you guys are really good at marketing. I want to really grow this business. I want to kind of triple the size and add some more staff and kind of have this vision for what it's going to look like. Can you help us? I said, well, I'll tell you what, I can help you. I will make sure that all of our new deals come through you, and I will bring some other new deals for you. But I want a piece of your business. And instead of paying me, instead of paying my marketing firm, we're still paying them some, but I want some equity on top of that. Everything worked out perfectly, right? They tripled their business. We took a very nice stake. They sold the business. And again, who not how, right? He was like, I see you know how to do marketing. We aren't as good as I'd like to be. We know how to keep the books, like you don't know how to. Let's combine those forces, and then everybody wins. So
Love that. So, so you mentioned, so it's interesting because you have what I would consider unusual combination, right? Because a lot of folks who are deal folks, M&A folks or whatever, right? That's their expertise. That's where they're focused. That's where often, private equity folks or, like a CEO who's been brought in. I don't know if that CEO from that last company is brought in by private equity, whatever. But a lot of times if they have been, they have that mentality of deals because that's what private equity does a lot of, is that they provide money and fuel, right, to grow, often inorganically. But also, you also have this marketing side where, like, so, even in the example of that second company where you did a deal to combine those two, and then the organic growth side, in part, it was sparked by the inorganic, by the M&A deal. But also, obviously, you did what you did on the organic growth side.
I am a marketer at heart. That's my passion. I apply marketing to M&A, but the marketing component is my passion.
Yeah, which is interesting because a lot of folks who market know nothing about M&A. A lot of folks who are in M&A know nothing about marketing, right?
Right.
So it's interesting. And I always, even though I spend my life working with people, as a lawyer, as a deal maker, as, what I speak on is all trying to get people to realize that there's all these, organic growth opportunities. And by the way, not just M&A, not just capital raising, but joint ventures and strategic alliances and licensing deals and affiliate deals and, distribute whatever it is, right? There's a million types of deals. I only do that because I feel like it's underrepresented. But if anybody asks me, I'm going to say, you better, I mean, if you don't know how to get a customer, a client, and make a sale, right, and get another one, unless you're one of these, tiny percentage of the companies that's solely formed as an acquisition company, like you form your company just to do roll-ups, right, which is like, less than 1%, you better know how to do organic growth as well. And in fact, it affects, I mean, we just, we've been having a lot of conversations in the investment advisor space where we do a lot of deals because the organic growth rates, absent market, because the investment advisors get paid a percentage of assets under management. So if the stock market goes up, they make more money, but that's not true organic growth. That's just, let's just ride the market.
Right.
Most of these firms are only growing 3 to 4% organically. If you're a firm that's growing,
That doesn't keep up with the rate of inflation at this point.
what's it? Yeah, exactly. If you are, if you're a firm that has managed to grow in double digits organically, then first of all, you can compete more. There's a lot of reasons for that. Obviously, your EBITDA is going to be higher, but you're going to get an extra turn or two or more on a multiple because those growth rates are going to come into the valuation conversation.
Exactly.
Yeah,
Exactly.
let's take a break from the show for a minute so I can tell you about an incredible resource my team and I have put together for you. Secrets of Deal-Driven Growth: Creative Ways to Grow Your Business Even in Challenging Times is a powerful ebook that helps you take DealQuest podcast episodes and apply them to your own life and business. This is the ideal tool for anyone looking for creative ways to grow as deal makers, and you can get yours now. It's as easy as heading to coreycupfer.com/workbook and downloading your copy. While you're there, you can also consider joining our dynamic deal-driven community of founders, experts, small business owners, and entrepreneurs. Now back for the show. So, all right. So how did you go from, so talk to us about that company that you built to 30 million. What was the exit on that? And then how did you come to what you're doing now?
That was, again, a PE-backed subsidiary of a larger deal. We actually did a number of acquisitions, went public on a reverse merger, and took my money and went off to go do some other stuff. And that's when I kind of started. I started realizing, well, this acquisition thing's kind of fun. I'm going to go buy me some businesses. So that kind of started my personal portfolio. It was just back in 2005. And started looking at different opportunities and doing some acquisitions and buying some flips and buying and fix them up and sell them. Which if you're really good at marketing, you can buy a business and increase the revenue by 50% and the profits and then turn around and sell it. So doing a lot of that. And in 2019, I decided to do that full time because I did a couple turnarounds and I was hired as the president of a startup and, just all sorts of fun stuff along the way. And I said, I really want to focus on the M&A thing. So 2019 kind of started down the road. Of course, 2020 was a wild, crazy year for acquisitions, but really was focused on building my own portfolio. And so I would do outreach to companies that were in my target. I say, hey, are you interested in selling your business? And like I said, 2020, I got a lot of yeses. And so I'd look at it and I said, well, that's great. I've looked at your business. I appreciate you showing me everything, but it's not quite what I want. So thank you very much. And they'd say, well, wait, hang on a minute. You got me all excited about, the idea of selling now, and now you don't want to buy it. Do you know somebody who might want to buy the business? And I said, oh, actually, I do. I think I might. So I started triangulating deals and became quite lucrative very quickly. And I realized I needed help. So I called my business a partner of mine from other businesses that she's been with me for a number of years. Her name's Becky. And I said, hey, I think I'm going to turn this into a business. Do you want to come on board and run it? And she said, yeah. So we started Westbound Road as an advisory firm for acquisitions. And it's a very specialized, we have a certain niche that we stick with. It's not a huge firm. There's only 5 people. We kind of do lower middle market deals between about 5 and 50 million. And we only do digital stuff. So e-commerce, SaaS, publishing, affiliates, marketing agencies, things like that, along with virtual professional services firms like bookkeeping firms or accounting and other B2B type firms that are not physical, they don't have physical presence. So I started that with the intent of just kind of helping buyers find sellers and that sort of thing. But I quickly found where the real need is before the transaction. It's helping founders who are completely clueless about what they have. You talked about when you were, 17 years old and you had an asset that had value and you didn't even know it, right? You know how many business owners are there that they've had their business for a decade or 15 years and they don't even know, they like, well, I guess I'm done. And they shut out the lights and walk away and they leave behind a legacy and assets that have value. So we do a lot of advisory services. I tell everybody the time to call me is 3 years before you're ready to sell. I want to help you maximize the exit. So we're not so much brokers as much as we are is really more advisors. And then we also take equity in a lot of the deals that we have involvement in, depending on the situation. So again, building our portfolio of acquisitions. So we're a little unique in that space, but we have a really strong track record of success. We only take on deals we're very confident we can close. And that's kind of what we do. So we're helping sellers or owners become very successful sellers now or in the next 3 years. And then a very limited portfolio of strategic buyers who are doing roll-ups or verticals to execute those. The ones who realize they can make money buying their competitors but don't know exactly how to do it, we help them. We don't work with any kind of individual mandate searchers or acquirers or anything like that, but we will work with portfolios or roll-ups.
Got it. Yeah. So tell us a little bit about I mean, it's interesting because I began a lot of questions, of course, at this time of year, we're recorded for the folks, this is going to release a few months later, but we're recording this in December of 2025. And of course, when you come to the end of the year, whether it's reporters interviewing me for articles or whatever, everybody wants to know, okay, sum up 2025 and what do you see for 2026? Like we all have crystal balls, but of course you got to, and it's interesting because in the beginning of the year, when I was asking people about what they're seeing in trends and whatever, I was talking a lot of sort of headwinds and mixed signals, right? You had interest rates were still higher. You had a lot of uncertainty around, trade policy and things like that. Yeah, tariffs, exactly. We all know uncertainty has people I've always said that the order of preference for most people, business owners, et cetera, deal makers is, I'd like certainty in the way I want it to like in the way I prefer. The second choice is actually certainty in the way I don't prefer. And the third choice is uncertainty. Like, even if I don't get what I want, if I know what the playing field is and know what the game is, then I can make business decisions, right? Interestingly, now, I still think there's some uncertainty, but things have seemed to calm down about the swinging, tariff policies. People, again, some people may like or dislike them, but it's becoming a little more clear what the landscape is. What just came out when we're recording this, I think it was today, that now because of the government shutdown, these are delayed figures for a couple of months, but it says that the economy grew faster than expected in the third quarter, right? It's 4 point something%, which is higher. I've seen some reporting in the fourth quarter, like in certain sectors, like in the wealth management space, whatever, it's been gangbusters because PE money is coming in like crazy. But in other sectors, it's been a slower year than people had hoped. But the fourth quarter is picking up across sectors from what I've seen. And people seem to be optimistic coming into 2026. So in the areas you focus on, what are you seeing?
Wow. Every year, it's like I always, I sum up every year going, that was a weird year, and then you started in, 19 and then 20, of course, didn't get any weirder than that. And then 21 and 22 were fantastic because, I mean, they were record years in acquisitions. But
Yes.
yeah, 25 was very interesting. It started in January with a high level of exuberance and a lot optimism, and the stock market hit record highs and everybody, and then, the tariff thing started pretty quick and just everything came to a screeching halt. Keeping in mind, we do a lot of e-commerce stuff, so it decimated the e-commerce industry, for a couple of months there, and any kind of acquisitions happening in there. We are just coming off of the strongest late third, early fourth quarter we've ever had, because there was so much sitting on your hands that was happening in
Heads up demand.
Q2 and early Q3.
Yeah.
And, capital has to be deployed. Deals have to be done. Business has to happen, even in times of uncertainty. If you wait too long, bad things happen, right? So people have realized that, and our September, October, and even into November, and usually by mid-November, like things come to a screeching halt and everybody's kind of winding down for the holidays. Our late November, we had deals going on the day before Thanksgiving, and it was crazy. So we're seeing a very strong demand, both buy side and sell side, coming into 2026. I think people are realizing that uncertainty is the new norm. You've got to do business regardless of what might be happening outside of what's in your control, right? We're seeing coming into 2026, we're seeing a lot of a lot of sell side interest. A lot of businesses are really exploring exits in 2026, and an incredible buy side demand. I mean, every deal we have, we're seeing hundreds and hundreds of buyers coming through, and we haven't had a single sell side deal that's had less than 5 offers on it, almost 2 years. There's still a lot of dry powder out there, a lot of capital. The entrepreneurship through acquisition mindset that's growing is bringing a lot of really nice buyers out of the woodwork who are, corporate refugees, or they've lost their job and they're looking for a $4, $5, $6 million lifestyle business. SBA has been interesting. They relaxed a bunch of their rules and caused a huge buying frenzy, and then they tightened the rules back up again. Then the government shut that down. But because we do some SBA stuff in the the $5 to $10 million range, but I'm hearing the SBA is there's a very aggressive campaign afoot to get the standard SBA 7A limits raised from 5 to 10. If that happens, I think it's going to be wonderful. I think there's a lot of businesses in that $5 to $10 million range that could really use some new ownership and use that program to help people get it. So I think 26 is going to be weird again, but I think it's going to be a good year.
Yeah, that's the sense. I mean, listen, obviously, whenever I'm asked to make these evaluations or predictions, there's always got to be that asterisk of who knows what black swan event or
Yeah.
world war invasion or whatever. And whatever, and the other interesting part is that, and I'll just say this, we don't spend time talking politics on this podcast, but I'll just say the smart folks, like, whether you like the politics or not, right? That should not, like, you got to get a clear-eyed view of what you think is going on in the market and what the business opportunities are, right? And I think you're right. I do think that there's this thing where ongoing uncertainty becomes the new norm, and I do think the uncertainty's moderated a bit, but
Right.
but it does become like, the new norm, and you're right, like, there's so much dry powder on the sidelines, and people that don't understand PE don't understand, like, you don't raise funds to sit and have the money be undeployed, and yes, you don't wanna be undisciplined or make rash decisions, but, there's only so long that's gonna sit there. As you said, on the sell side, you got folks who've delayed, and especially if you're talking about businesses that are on the smaller side and lower middle market and things like that, there are a lot of, like, life circumstances affect people's sell decisions. It's not, big companies, any one person is getting tired or older or sick or whatever, it may not affect the rest of the management will take over on these small and medium-sized deals. There's only so long some people are gonna wait it out.
Yeah. We're seeing something interesting in the SaaS world. We do a lot in the SaaS tech space where valuations in 21 and 22 were so massively overblown. In 23 through 25, what we've seen is founders saying, I want to sell, but I want to sell for what I got offered back in 2021. It's like, well, you got offered 50 million and you walked away from it, and now your business is worth 12. And so they're saying, oh, well, I'm going to wait for the market to come back. And I show them the chart and I said, the market's back to where it was. There was this weird anomaly for a year and a half. You didn't take the money and run. You missed out. We're back to, and I'm starting to see finally founders going, okay, that it's not coming back to those crazy numbers. Now I need to be more serious about it. So we're seeing that in that space as well, in the SaaS world, that they're now understanding that they missed the boat in 21 and 22, and the boat's not coming back in the foreseeable future. So let's talk what really is happening today and make something happen for you. So
Yeah, it's really interesting because that, like, some people that haven't done deals can maybe more identify that on, like, in housing. Sometimes that happens, right? Where either you bought or you thought you could sell at a much higher than the market's, and it becomes like there's the logical brain, but there's the emotional part as well. Like, so people they have to take some time to readjust to the fact and admit, okay, listen, I missed that, right? I'm not gonna.
right.
There's no time in the yeah. I mean, maybe at some point, but that's not going to be 2, 3, 4, maybe even 5, you're going to wait 10 or 15 years to see if you get another bubble, like
Right. That's exactly,
you know,
and that's exactly, and I think some of them have taken a couple of years to kind of come to terms with that. So we're seeing a lot of activity there where they go, okay, I guess this is what the market is. Let's talk about what an exit looks like. So
yeah. Yeah,
a
yeah,
lot.
yeah, exactly. Yeah, tell us a little bit more, about, I mean, obviously we talked about the sectors, a little bit about the size of deals, whatever. Anything, I mean, you different, right? And we pointed out a little bit, before, right? When a lot of people, like we've had people on who, in fact, it's become an industry. Like when I first started doing deals, there wasn't an industry around people who prep people, right? For exit planning, but
Right.
like there was, I mean, I'm not saying there wasn't a consultant here or there, but like there's a whole industry now. And there's books and there's, whatever, right, on exit planning and whatever. And I've had folks on that who focus more on that from the financial side, right, from cleaning things up side, from the building the management team side. Talk to us a little bit now. I mean, obviously for you bring that marketing expertise, and one of the ways certainly you can increase value, enterprise values to grow EBITDA, top line revenue, and then obviously have it come down to profit. But what are the other, like, in terms of prepping people for sale, what else do you do to help these
So
companies?
we
Go.
focus on kind of 7 or 8 areas. So you talked about the financials. We focus on building an operating system for the business and making sure that it's running autonomously. We're a big proponent of, I'll talk about, I'm a big reader, so I'll talk about books all the time. So
Yeah.
old book, 7 Habits of Highly Effective People, right? One of those habits is begin at the end in mind. So we'll sit down with the owners and say, okay, who is going to buy your business and why? And then now let's build that business to suit them so that it's a no-brainer when we're ready. So we begin with the end in mind by identifying those buyers, building the business to suit them. We focus on profit maximization, not tax mitigation. We see a lot of that where, people are really focused on saving taxes, but not realizing that every dollar of EBITDA they're giving up to save taxes, they're saving 20 cents, but they're giving up $7 on a multiple. And it is crazy how often I see that. And I do the math and they just go, oh, whoa, okay. Yeah, call your accountant. Let's shift that strategy, right? And then we look at, again, back to the, who's going to buy your business and why. I just engaged somebody today. So they built their business completely with VAs. I said, yeah, you have a nice business there and it's doing well, but guess what? There's a lot of people who will not buy your business because it's all offshore VAs. So if you want to sell that business for the kind of multiple that you want to have, you're going to have to start bringing onshoring some things. You're going to have some W-2. And it never occurred to them that, well, we have these huge margins because yeah, but guess what? People won't buy out business. So we look at the entire business holistically and to understand every decision. We had a deal about a year ago where the business selected a CRM system that was very much non-standard for their industry. And an acquirer came in, they actually walked away from the deal because they didn't want the headache of trying to integrate their CRM with what the industry standard was. And they just said, you know what, it's not worth the headache. And I said, why did you choose this CRM? Well, we just didn't like this. Yeah, but the people who are going to acquire your business, everybody's on this particular system. Why add friction to the deal? And these are things that a lot of times business owners don't think about. They just pick the one they liked. Well, that cost them millions of dollars because of that. So we're looking at the business holistically when working, like everything from the types of team you have, the employees, the systems that you have integrated, everything. What are all the points that are going to make your business more or less valuable when you're actually ready to exit? And that's what we look at.
It's so crucial because, one, like you said, a lot of folks don't even realize the factors that go into it, so they wouldn't even know what to do, like what they should even be focused on. Some that they may realize, oh yeah, it would be better if this, and this, but they don't know how to execute or implement that, right? Because if they did, they would have done it already, probably, right? Or maybe it's a combination of that understanding how valuable that could be, so it wasn't a priority, right? It's really crucial. And listen, it's a great saying. And listen, I say it to clients when they launch, and we have some, we have a lot of clients that launch at a very sophisticated level, right? Because they have capital and they come, and at that level, maybe it's a little different, but it's easy to say to a business that you should, and it's true. I mean, the best practices of creating a business that has enterprise value that's going to be sold at the highest multiples and have the most offers are some of the best business practices you should be doing anyway.
Right.
But
Yeah.
realistically,
A business that's fully prepared to sell is the best business to own
that's right.
because
And
you've built a
you
business that nobody else would want.
That's right. Even if you know, sell it. But, I also feel like, especially when you get down to, lower middle market and below, it's easy to say that, right? But, it's not like as much money or built out executive team or training or people or knowledge or that kind of stuff. It almost becomes in some ways a platitude, and without somebody actually going in there, like, unless you have an entrepreneur that's really committed to learn, and whether they go to Strategic Coach or they go to Rockefeller Habits or they go to EOS or they go to, like, there's all these operating systems and coaches and consultants and ways that people figure out how to create a business that runs without them and build an executive team and whatever. But, we all know that that's a journey and a process, and it takes time and money, and it's not always the case. So when you guys come in, the majority of the businesses are not like, in fact, they wouldn't need you as much if they were totally on their game and humming along and
Right.
figuring all this stuff out and knew what to do, right?
Right. Yeah, exactly. And the majority of businesses in that lower middle market, that, the kind of 5 to 10 to $20 million range, they all, you never see one that kind of has it all together. And so there's lots of opportunity there to help those types of businesses.
Love it. Before I share my final two questions, anything I haven't asked you, anything you want to cover or say, whether it's about what you guys do or the market
I
or...
think so. I mean, you've really asked some great questions, and we've talked kind of all over the place, but I think we've covered a lot of ground and hopefully provided some information and inspiration for your listeners, which is the goal.
So people want to find out more about you and your companies and all you have to offer. Where do they go, Marty?
Yeah, so I'm the only Marty Fahncke in the entire world. So if you Google me, I'm the guy that's going to come up. I'm very proud of the fact that if you do Google me, that it's all good. Like, you don't find anything bad. My main website for my M&A business is westboundroad.com. And then I'm very active on LinkedIn as well. So if you're hearing this and you want to connect on LinkedIn, I share a lot of content there, and you can learn a lot from following me over there.
And obviously, you'll see in the show notes, but it's Fahncke, pronounced Fahncke. Definitely check it out. Marty, my final question of the podcast is always about my highest value in life, which is freedom. And for me, that means everything from freedom around the world for people from oppression to why I've been an entrepreneur for decades and haven't had a boss. What does freedom mean to you, and how does it impact your life and business?
This is a great question, because I identified this years and years ago. Freedom to me, at one time I wanted to own 10 businesses in 10 different states. This is my definition of retirement, by the way, not playing golf or anything. And then I wanted to ride my motorcycle to each of the businesses and just like kind of, spend a week at each one and just kind of be high level, just kind of operating the businesses. So I set that goal about 20 years ago. I will tell you, I own 5 motorcycles now, not just one, and I own over 30 businesses, not just 10. Definition of freedom hasn't changed. It is making an impact on entrepreneurs, helping them grow their businesses, helping them exit successfully. The only difference now is I'm also going to be a part owner of that business when they do. So
I love it. Marty Fahncke, thanks for being such a great guest on DealQuest.
Thanks, Corey. It's been great.
Thank you for joining me on this episode of DealQuest, where we help you understand how deal-driven growth can be your ticket to freedom. If you are interested in finding out more about my law firm, the services we provide to entrepreneurial and growing companies across industries all over the country, and my partner Brian Megan and I, and my amazing team, just head over to kupferlaw.com. That's kupferlaw.com. And if you want to follow more of my content, head over to my LinkedIn page where I post regularly. I'm Corey Kupfer. Until next week, wishing you the freedom and financial prosperity that I know your DealQuest will bring.